Is a stock market crash coming? Well, I think at least a correction is going to come soon. And there's a number of reasons why I feel that way. And I'd like to explain those reasons in this video, share with you some of the information I'm seeing, and make some conclusions of what I think is going to happen. I've been investing for 30 years and have seen a couple of significant crashes. For example, that .com crash. It was interesting because at that time, we all knew the internet was going to be big. We knew it was going to be really big and really transform and change the world. It certainly did so. But stock prices, especially for some industries, just went too high and the market corrected and really punished investors who were in those industries too long. And the .com era really reminds me of what we're seeing now with AI. AI promises to be a very big, monumental shift in computing. It's supposed to create a lot of efficiency for businesses, for students, for universities, for healthcare, all kinds of use cases. I'm not doubting AI. I think it's going to be interesting and hopefully bring a lot of benefit to mankind. What I am doubting is the exuberance in some stock prices. The exuberance exists because once you detach yourself from reality, anything's possible. And I think some stocks have really detached themselves from reality that are specific in the AI space. In all cases where stocks became way overheated, it always ends the same way. Those stock prices crash, they correct, and they take over a decade to correct. And it's likely going to happen again. I can't say how soon, but I'm saying that it's probably going to happen. If we study the past, we could see how the future is probably going to end up. Before I jump into the analysis, let me just remind you, I'm an individual investor and I don't provide any financial advice. I'm just sharing my experience, sharing my opinions, sharing my analysis. I don't recommend that you buy or sell any of the stocks that I'm going to talk about. And let me just share with you a little bit of one of my sponsors, Moomoo. Moomoo is a brokerage and they offer a really nice offer for new account holders. You can earn 8.1% on cash for the first 3 months and then 5.1 after that. And they'll give you 15 free stocks. Take a look at it if you're interested. I'll put details in the description of this video. Let me look at the market overall first and kind of look at the last, let's call it year and a half. Since the end of 2022, we've been on a really nice rise. And let me take a look at where each particular index has been trading at. The one that's cited the most is the S&P 500. And I'm looking at the last month. Over the last month, the S&P has done well, 2.5% increase. The Dow Jones, which is made up of more older established companies, is down 3%. The NASDAQ is up almost 6%. Go NASDAQ. And the Russell, made up of small companies, is down 4.3%. And we'll see that there's a theme of certain parts of the stock market are really appreciating fast, and certain parts are really being left behind. So it's not a very balanced appreciation. It's certain sectors and specifically some industries are really going up fast. When we expand from the 1 month over to the year to date, the theme kind of remains similar, where the S&P is up 14.5%, and that's excellent. The NASDAQ's up almost 20%. And again, the Dow is behind 2.3%, and then the Russell is down 0.3%. Now, Dow companies tend to be older dividend paying stocks, and these tend to be producers of products, manufacturers, distributors. These are like the core economy in the United States. These are companies that are restaurant companies, food companies. These are very staple type of industries, very important to the economy. And what I'm getting out of this type of reflection is that the booming companies are like the AI space, technology space, and some companies that are really growing fast. And that's well deserved if they're growing really fast and growing their profitability and growing their free cash flows. But the established economies and the small companies, the appreciation rates that I'm seeing tell me that there's not a lot of exciting things happening within Dow companies or small companies, which leads me to believe that the economy is sluggish for those companies. They can't get out of that sluggish environment. It may be that during the COVID years, the US government had to really stimulate the economy and give out a lot of checks to its citizens so that they can hunker down and wait this COVID thing out, get vaccinated so we can get over COVID. And in that era, a lot of these companies did quite well, but maybe they pulled too much demand forward. Maybe they're just not really operating that well, or they're not globally competitive. There's a lot of factors that weigh on these Dow-based companies and small companies. So that's one of the themes that I continue to see, which is the best in the S&P are really taking a majority of the gains, and that's definitely the case. I think what used to be referred to as the Magnificent Seven stocks, they represent about 35% of the S&P 500. And if you think about that, seven stocks representing 35%, and then 493 stocks representing 65%. It's really imbalanced. Just a few companies are really leading the charge. As we expand out to the 5 year, that way I can show 2022. Here's really where we got to the bottom of the last correction. We had a correction in 2022, not too long ago. It was about a year and a half ago. We had a pretty good correction in the S&P. The S&P corrected about 25%. The NASDAQ went down even more. And that shows us that from October 2022 to this point, I mean, you've seen phenomenal growth. And I can't show it with that type of view, but I'll show it with the 5 year just on the S&P. From October 2022 to now, we're up 51.59%. That's great. That's phenomenal. That's about a 18 to 20 month range. That's great returns. The other thing that's happened since we had a pretty good pullback in 2023 to this point now, we've seen the stocks rise in the S&P 500 about 32%. So what naturally happens over the course of time, and you can see we had one correction due to COVID. We've had one pullback and correction in 2022, and we had a pretty good pullback 2023. These pullbacks and corrections are just normal. It's a way for investors to take profits. It's a way for the markets to correct themselves. And markets may take a while, but they usually correct. They usually get to the true value of a particular stock or a particular industry. And that's a really one of the basis of why I continue to think that we are headed toward a correction in the stock market. I don't know about a crash just yet, but most definitely I would be surprised if we get to the end of 2024 without seeing a correction of 10% or higher, just to reset some of these super hot industries and get to what I think is a more reasonable pricing on stocks and get out of this euphoria that we're currently seeing, especially with AI stocks. Some sectors of stocks are really overheated, while other sectors are really being left behind. The technology sector year to date is the hottest one, and the technology sector, probably semiconductors are in that sector. They've done great. Congratulations if you own those stocks. But that's just in my opinion, and really my senses tell me that's not sustainable, especially since technology tends to be cyclical. You think about it. I own an iPhone. I don't buy an iPhone every year. I buy an iPhone every couple of years, and I happen to be sitting on an iPhone that's fairly old because it does everything that I need. I pretty much have tapped into every benefit that I can out of my iPhone. So I don't need an iPhone for a while. So Apple's going to have to wait for me, or Samsung, or whomever else wants to sell me a smart device. I have to wait for a while before I buy a new device. That's cyclicality. Technology companies come out with a really exciting product, customers buy it, and then demand goes away because that product is quite durable. It lasts for a while. And really, there has to be a significant refresh at some point. AI companies would argue, yeah, we're going through that really monumental, retooling of technology for AI. And I would agree that the retooling should happen. But the pricing that I'm seeing is they're going to retool every year for the next 10 years. That just doesn't make any sense. It'd be like me buying an iPhone every month and then stacking them in my garage, just waiting to see if my current iPhone breaks. And I have a nice inventory of 30 or 40 iPhones in the garage ready to be used in case my current iPhone breaks. That's kind of like the euphoria that I'm seeing within AI stocks, semiconductors, hardware companies, and technology. And I just think that's going to end with prices being corrected and really people becoming more rational as opposed to being euphoric. In the state of euphoria, I think people are believing that companies like Dell are going to sell incredible levels of hardware for this AI build out. But the evidence is Dell's earnings. If you look at their earnings, they had modest growth, a little bit of growth, but nowhere near this euphoric level of growth that you would expect. If you look at other hardware producers, you're seeing the same thing. You're seeing modest growth, but not this euphoric level. The other industries that are doing really well, or excuse me, sectors, are communication services. And communication services include Alphabet, Meta, Netflix. And those industries, I would say there's a little euphoria there too, but not quite to the levels of technology. Healthcare is beginning to show up in 2024, which is good to see, especially with companies like Eli Lilly really innovating, bringing drugs that are helping people with diabetes and weight problems. So that's really neat. In the middle, the companies you would expect: consumer staples, utilities, industrials, financials, who's kind of been left behind a bit. And I think that has a lot of legs to perform really well in the future. As we look at energy, energy has really been beat up, and oil prices continue to be just slightly below $80 a barrel. And I have 30 years experience in investing in energy companies. And I believe that at the current oil prices, these energy companies are going to do really well. They're going to be very profitable, continue to pay their high dividends. As well as in energy, you have companies that produce power, companies that produce natural gas, the materials that are needed to create power. So there's, I think, a lot of opportunity within energy. It's been really beat up, especially over the last 30 days. Material companies, we're hearing from the Fed and we're seeing economic data that the economy's been sluggish. I don't know that we have felt growth. Maybe some industries are doing quite well, while other industries are sluggish. For example, the travel industry is doing really well. People continue to travel, hotels are full, and those types of companies are doing well. But other companies are quite sluggish. If you look at companies like Whirlpool, who sells appliances, they're struggling. Their revenues are really down. You look at Home Depot's earnings, people are not putting money into their homes like they were a couple of years ago. So you're seeing that material companies are really sluggish. And then last, with higher interest rates, it's putting a stress on real estate, which is interesting. And there's a couple of factors happening in real estate. One of them is the interest rate effect and how it makes it more expensive to buy real estate, to build real estate, to develop real estate. But there's also the factor of you've had a big shift from employees going to corporate offices and now employees preferring to work at home. And that has really affected the occupancy of commercial real estate where it's office space. So there's been a big change in that market. I think it's really affecting the real estate market. I think there's opportunity in real estate. I think the opportunity continues to get better and better. And I'm really looking at real estate as another sector where there's hidden opportunity. Looking at industries, which are a additional level of detail, the best performing industries, by no surprise, is semiconductors. And semiconductors traditionally have been cyclical. And I don't think anything's changed. I think they'll continue to be cyclical. So they've experienced a really good year, and that's really back to back years. So I think that's where the euphoria is highest. Utilities have been a surprise. It's expected power companies are really going to increase the amount of power that they have to produce in the future. Now, that's not going to magically happen. They're going to have to invest quite a bit to create more power plants. We'll see how that develops. I'm not all that bought into the utility industry. I think it's always been a really bad investment choice for me, but we'll see how this one plays out. Computer hardware is really overpriced. Computer hardware is a commodity business and they don't have a lot of profit. So I think that's an area where some of these stocks are just really, really overpriced. Now, looking at some of the industries that are performing quite bad in 2024, and maybe there's some opportunity there to buy companies at a really good discount. The one I'll note first is real estate diversified, especially real estate that makes a lot of sense for the current economy, like warehouse space and other types of real estate. So I'm going to be looking at real estate companies and see if I can pick up a nice real estate company in the right place. The other companies that I'll note or industries are casinos. The travel industry is been doing really well. Hotels are full, and I think people are really into experiences now. So as I look at resorts and casinos, I'm seeing really good performance, but I'm also seeing that their stocks are really discounted. For example, Vici is doing really well, and that stock looks good from every angle I can look at it. So I'm going to continue to look in that space and see how I can invest further. Forecasting what's going to happen in the future for the stock market is really difficult. And what you heard are really my best estimates, not a perfect science. I wanted to share my thoughts on what I think is going on, where I think there's too much euphoria. And I don't think I'm alone out there. As I watch videos online on YouTube and also watch the big investors as well as the big analysts speak, I'm hearing more and more that they believe, especially the semiconductor industry, is way overpriced and is set to correct. We'll see if that plays out. I'd be very surprised if we get to the end of 2024 without seeing a good correction of 10% or more. I'd be shocked if we go another 12 months without seeing a solid correction of 10%. We'll see what happens. And we'll certainly keep looking at it. I will be looking at it and be a fan and an involved investor in the stock market every step of the way. I hope you found my video interesting and I appreciate you watching.